Good afternoon, everybody. This is Mark Lambert from David's Pension. It's approximately 3 p.m. Eastern Standard Time. Um, I'm just going to go over the last video that I produced. I believe it was either Friday or Saturday. It might have been over the weekend, but it was after Friday's close. And just show what was the reason why I believe the market was supporting yesterday. Though the support should be just for a short period of time. I'm just going to kind of go over the methodology of why I do what I do and how Anthony and myself kind of place our trades. And we don't just look at one thing, but we do use wave mechanics as a large portion of our trading. That every action always has a reaction. Every move always has a counter move. And just basically how to judge when these actions or reactions or counter moves are going to be occurring. It's just basically like an electrical engineer who just looks at various time frames and so on, and basically can use an oscilloscope to judge when a wave should come to a completion based on past performance. Well, I'm going to show this right now. As a matter of fact, this is I probably showed this a couple times before on various websites and so on. But basically, we just look at the market as basically an oscillating um, waveform that radiates and gravitates and goes back and forth, moving up and down, along a certain timeline. And when you could take a look at this and superimpose this onto a stock market chart, it gives you a lot of information on where things should be changing. Now, when you take a look at this larger, let's say this is a larger swing that you would look at maybe like on the hourly time charts. And then you would take this chart right here and superimpose it on the swings. Whereas this would be the oscillation of the move, whereas this would be the vibration of the move. These are the smaller oscillations happening within the larger. And I'm going to go over why I thought yesterday's support was going to happen, and just kind of show. This is the chart I sent out yesterday, and to me, this was my first alert that the market was going to be supporting. My last video I had produced showed that the 200 should have held, and this was probably Friday afternoon. We were right in this area right here, and apparently it didn't hold, but the sideways action that was happening during the day on Monday was kind of giving me a hint to the fact that I don't think the market's going to go much further. By also plotting the up and down volume of the market, also the advances and decliners, you could see that basically the sellers were running out. I mean, there was nobody left to sell. This is almost like a capitulation move. Short term though, short term I believe. Um, and when there's no more sellers, it's like anything, just things get way back to the other side. Now there's only one thing that's going to happen. Okay, the market's no longer going down. So what do? People are going to start stepping in to book their profits, and the more people start stepping in to book their profits, or in this case, most of the people that were basically gonna sell already sold, and now that this starts to happen, more and more people start stepping in, and it just kind of starts to cascade on itself. Okay, the market's starting to go back up, it's reaching certain levels, people start covering their shorts, and the more people start covering their shorts, the market drives up forward. Well, this was a chart yesterday where basically I was looking to get short, which I did. I ended up, not got short, but get long. Yesterday I did buy a bunch of call options, and they worked out very, very nicely. And this morning I actually closed them right at this area right here. But anyways, that's the reason why I believe that the market broke down below this 200% level yesterday was I'm sure a lot of brokers, large firms, and so on also understand that they understand these levels. How they use them, I think basically when they know that they're in the support area like this, which I'm sure I'm not the only one that was looking at this area as being support on Friday. I think this was just basically a stop running um, setup. Basically, a lot of people probably got long at this area on Friday and placed their stops just below this. So what they do is they basically trigger a lot of stops, which ends up being profits in their coffers. And that's just my own reasoning. But the reason why I wanted to get long here, if you take a look at the two slides I just showed you, these are basically the up and down oscillations. And the reason why I wanted to get long yesterday was because of this. This area right here, as you can see, we had been making a series of lower highs and lower lows, basically conforming. And this was a three-wave move up. And now I can see a very distinctive 1, 2, 3, 4, and now finally a five-wave move down. Now, every single time I see something like a five-wave move, I'm looking to close out. In this case, would be a short, which I'm sure a lot of other people are also looking to close that out at this point in time. We have a five-wave move down, and then right here, this high, this reaction, when you're looking at this as action, reaction, this reaction actually breached this previous high. So, which kind of clues me to the fact that as those little sine waves I just showed moving down this way, all of a sudden now they're starting to move in the other way. This vibration of price along this longer oscillation of price showed me that at this area that we're most likely going to be moving higher than this high right here before we break down below this low, just because of the fact that this high reached this previous high. Pretty simple. It's something I would, I wouldn't use just alone, but like I said, sellers were running out. There was no more. There was no more selling. The volume had dried out on the selling side. And then when you see this first hint right here, this is telling me that the market should be moving up. And now one of the things I would also look at is that we formed a wave 1 up, and now I believe this is a wave 3, because inside of here we see 1, 2, 3, 4, 5. This will come to an end. I believe what we're going to have is maybe some short period of consolidation and another drive to a high. And then after that, this structure right here, this price vibration, should pull back to one of these Fibonacci levels on the blue fibs right here, and then make another drive higher. The next drive higher, I'm not exactly sure where it's going to go to at that point in time. Like I say, what we normally do is we use 3 points in all of our trading. I don't use Fibonacci extensions at all. I'm aware of them. I use them once in a while and take a look at it, but basically projecting the price forward in time using 3 points rules the market. I don't use retracements very often either. The only time I'll take a look at it is when one of my projection levels is kind of reaching a level where it should turn. That's pretty much it, folks. I mean, pretty simple. Just look at these little areas like this, which I believe is the way the market kind of hints to us that things are going to change. And of course, this actually hinted, during the day yesterday, and then of course China came out with some new reports and so on, and that's what everybody else is now attributing the market rally to. But this area was telling me yesterday that the market should be moving up before it goes down any further. And also, as I see these waves complete, I'm going to take some angular relationships of what's going on to judge where we're going to go to next. I do believe this is going to move a little bit higher, but I do not believe it's going to reach this high at this point in time. I'm looking at this as a 5-wave sequence that will complete probably overnight, only to retrace in a 3-wave and then move back up higher again. And from there, I would start looking at these green and red fibs as offering resistance. And when we do have resistance, especially if we have a confluence of fibs all falling in the same area, because this blue one is pretty active, which, when this first wave is done and pulls back, I will be using the next point to the top and then to the bottom of the pullback. And when we can see confluence in the price chart, that's probably where the market is going to radiate to. And once it gets there, that's where I would definitely be covering any longs, basically closing them out and looking for another little oscillation, as I had shown in the previous chart, that's going to show that the market is starting to move down once again. That oscillation is basically what most people would call a secondary, meaning we've been moving up in a series of higher highs and higher lows, and then all of a sudden we have a lower high. At that point in time, that's a hint that it's probably an area where you should close out your longs, and at the same time contemplate putting on a short. Basically, everybody has a different risk tolerance, I guess, and that would be an area where, like I said, that's where you would close out your longs, and also at the same time contemplate putting on the short. Whether you do that right away or wait for more confirmation, that's where the risk tolerance comes in. So, anyways, I hope you find these videos useful. We're going to show more methodologies also as we move forward in time, and I wish everybody good trades, Godspeed, and God bless, and talk to you soon.